Well, this is not something you can do very easily. You know, that people make mistakes, especially when they apply for either Navy Fed or PenFed. So in today's conversation, I want to talk to you about the $25,000 PenFed line of credit, why you are not getting the limit you want, if anything at all. So you want to stick around till the end of today's conversation because I'll be dropping a lot of gems today. Okay. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about the $25,000 PenFed line of credit, why you are not getting the limit you need. Okay, if anything at all, because they can actually reject your ass and not give you any dollar. Okay, the maximum amount is $25,000. Okay, now the first thing is you're not getting the limit you want and need because you have low assets. Yeah, low assets. This is important. Now, if you have a low level of assets, then you really need to think about beefing up your assets, your asset base. Okay, let me explain. When we talk about assets, we are speaking about cash. We're speaking about your savings. So cash in general, I'm speaking about cash in your checking account, cash in your savings account. What? Yeah, if you have a car can also be, no, but see, the thing is that a car has to be fully repaid though. Yeah, so, you know, the thing here, Bob, if you think the car that you have right now, you cannot claim it as assets because you still have a payment going on that car, but it has to be fully repaid. So if you have a fully repaid house, you can count this as assets. The bottom line is that if you have a low level of assets, you cannot be approved for the PenFed line of credit, especially when other things go against you. In other words, you have a low FICO score, you have an unstable history of employment and all that kind of stuff. So when we talk about cash, we are speaking about when we're speaking about assets, rather, we're speaking about cash. Of course, if you have a fully repaid car, if you have stocks and other investments, okay, if you have some equity in your home, this can be considered, the equity part in your home can be considered an asset, okay. And so overall, when we talk about low assets and low level of assets, we are speaking about not just at the individual level, okay, we are speaking also about the household assets. So those are something you need to think about. So before you actually apply for a PenFed line of credit, and if I were you, I'll probably try to beef up my asset a little bit, okay? So that I am in a position where I can say, you know, I do have something. So money. If you want to increase your asset level, you need a lot of stuff you can do, right? You can increase your income level. You can increase your investment activities, right? Invest more in the stock markets or real estate or what kind of, whatever the investment is, you need to generate more cash inflows. The second reason why you're not getting the limit that you need when it comes to the PenFed line of credit is the recency, what we call a recency of your presence. In other words, you just came to the party. You just got approved 3 months ago or 4 months ago, and all of a sudden you want to have a $25,000 PenFed line of credit, boss. It ain't happening. Okay, you are a newbie. You know, they just approved your membership. You want to wait. If you have been with PenFed for less than 6 months, and this is for you, Malik, I'm talking to you because you asked that question last time. See, if you have been with PenFed for less than 6 months, you want to wait a little bit. You want to beef up your relationship with them, okay? Don't apply for a line of credit or a loan or any kind of credit product. You want to wait a little bit, okay? And you want to take that time. If you have a weak relationship with PenFed, and by relationship, I'm talking about MPR, what we call here MPR, multi-product relationship. In other words, you haven't gotten the chance to establish is still a record with Navy Fed in terms of your checking account, certificates, IRAs, right? Individual retirement accounts, savings, MMAs, money market accounts, CDs, certificate of deposit. What I'm trying to tell you here is that if you want to think about your interest. Your interest is to get a $25,000 PenFed line of credit. What is PenFed's interest? Their interest is to make sure that you are a less risky borrower, but also that you park some of your cash with them. If you ain't got no cash, they ain't lending to you, right? That's just what it is. I mean, I'm not trying to razzle dazzle you with some fancy words here. No, if you have no cash, you cannot get a line of credit or loan from PenFed or any other financial institution out there. You got to have something. Show me the money, right? Show me something. Either the money comes from a job or from an investment or whatever. Okay. So here is a decision time for you. Big decision time. What are you going to do right now that you know that you need to beef up your assets? What are you going to do when you want to apply for a PenFed line of credit? If you're new, you just better wait. If you are new to the club, if you're new to the family and nobody knows about you yet, and they haven't seen a stable history of a account, a stable history of your account, you just want to wait. Okay, just be patient. 6 months, it happens very quickly, and you can just after 6 months, then you can apply for this PenFed loan, credit card, a line of credit if that's what you want. I really want to talk a little bit about cash flows. Earlier, I was talking to you about a low level of assets, right? And assets encompass cash and other assets. But now I want to focus on cash flows. Do you hear that, boss? I'm talking to you, father, dad, mom, grandpa, grandma. I'm talking to you. If your goal is to apply for the $25,000 PenFed line of credit, you want to pay attention to your cash flows, and you want to pay attention to your cash inflows and cash outflows. So your ass is being rejected because you have limited cash flows. In other words, PenFed is realizing that maybe you don't have direct deposit with them, or your account is constantly in the negative. Okay, you're constantly running NSF, you are constantly having the overdraft and all that kind of stuff. So this is actually precluding you, okay, from being in a position where they look at you positively. Okay, so very important. You want to pay attention to your cash inflows and cash outflows. There are two parts in this equation, and you want to make sure, ideally, that your cash inflows are above your cash outflows. Okay, and so if you don't have direct deposit coming into PenFed, you can be denied also. You cannot, you have to have direct deposit coming into PenFed. I don't care if it's 25%, 50%. What? I can't hear you. Speak up. Oh yeah, that's totally, yeah. I mean, 45%, 75%. The thing here is you got to have some cash coming in. Okay, you got to have some. And Michelle, this is for you. The thing is, you cannot just have a relationship with Wells Fargo and maintain that relationship with Wells Fargo and keep some peanuts in your PenFed account and hope to get a $25,000 line of credit. It ain't happening. Okay, so you want to have some direct deposit coming into the account, and make sure that your account does not have any NSF history in the past, non-sufficient fund. You don't want that. Okay, if you don't have multiple sources of income, this could also make your cash flows be really limited. Okay, so here is the approach. You want to follow. First, you want to have direct deposit come into the account. Very important. You want to link a lot more sources of income to your PenFed account. So if you have investments, for instance, okay, you also want to make sure that you have a lower level of expenses, so that you don't have overdraft, all that kind of negative stuff. Next thing I want to talk to you about, and this is for you, Lloyd, I'm talking to you. This is employment. So when we talk about the $25,000 PenFed line of credit, and by the way, the $25,000, that's the maximum, okay? If you want to have a $5,000 or $10,000, that's totally possible, not a problem, okay? But $25,000, that's really the maximum. See, the thing is, employment, it's important, and you're not getting the limits. You're not getting approved, or not. You're just getting a teeny weeny yellow polka dot bikini line. You probably apply for $25,000, and they give you 200. What's up with that? That's kind of crazy. You're like, I'm just out of here. But this can happen. They can give you 1,000 or 2,000, even though you applied for 20 grand. These things happen, okay? And so if you haven't had a stable job history in the last 5 years, this could be a cause. This could be the reflection. I mean, this could be the consequence rather. The denial could be a consequence of that unstable job history. Okay. The thing is, I don't care if you have a full-time job or part-time job. I just care that if you have a job. I just care if you have a job. You need to have a job. If you don't have a job, you need to have a legitimate source of income. Don't you try to work around and just tell PenFed that, I'm making money, but you can't prove income. Or you can prove it, but the income is kind of like a little dodgy. The whole thing is you want to have a situation where your income is clean, okay? Even if you can't prove it, because they're going to check your tax return. See, the thing is, a lot of folks walk around and say, "Hey, listen, I'm making 50 grand a year, or I'm making 80 grand a year." Okay, but I don't have a 1099. I don't have a W-2. Okay, that's fine. But you're filing taxes, right? If you're filing your taxes, they want to see your 1040 because they can see your 1040 and see how much you're making. Okay, so that's important. Now, so it doesn't matter whether you have a full-time job, a part-time job, you are seasonal, you are cyclical. It's really not a problem, but you need to have a job. But if you don't have a stable, because the key word here is stable, if you don't have a stable job history, this could be detrimental to you. If you are job hopping a lot, you go from point A to point B, your ass is never does never stay in one company for more than 3 months or whatnot. This could be detrimental to you. Okay, if you have a low pay, if you have a low salary, also this could be adverse to your chances of being approved for the $25,000 PenFed line of credit. So I'm going to give you a few pro tips. If you want to really prevent that, you want to have a stable job. Okay, you want to make sure that you want to beef up your pay, your income. Okay, and you want to explain things to PenFed occasionally. In other words, you can do it over the phone, or if you don't want to pick up the phone, you can just go online to your account dashboard and update your job history, your income history. Anytime you have a raise, anytime you have something positive happen to you, just go and actually just update that info. Let's talk about your FICO score. Now, if you have a FICO score that is less than 600, you could be denied for the $25,000 PenFed line of credit. Now, one thing you need to understand is that historically, and I'm talking about 25 years from now, or 25 years ago, or 20 years ago, or 15 years ago, historically, Navy Federal is less conservative than PenFed. In other words, PenFed is really conservative, okay? And so if you have a FICO score that's less than 600, whereas the Navy Fed could approve you under certain circumstances, PenFed might just deny your ass outright. So when we talk about this, what's going to happen here? What's going to happen is you're going to have a strategy where you work on improving your credit score, right? I mean, this should be actually the policy of everybody listening, whether you are a 725 or you're 300 in terms of FICO score. It doesn't really matter. What matters is that you have a strategy in place. See, it's all about formula, having a plan to improve your credit score. Okay. Even if you are 300, 400, if you don't have a plan, then you plan to fail. If you fail to plan, you fail to plan. If you fail to plan, you plan to fail, right? That's the right thing. So my point is, there are certain elements that you need to pay attention to when we talk about FICO score, right? Your payment history, your credit utilization, very important. Those two elements accounts for 65% of your FICO score. Think about it. Grandpa, I'm talking to you. Grandma, I'm talking to you. If you're interested in this 25,000 PenFed line of credit, then you want to make sure that you look at your FICO. And most importantly, your payment history that accounts for 35% and your credit utilization ratio that accounts for 30%. So those two elements in aggregate accounts for 65%. This is huge. And then the last three items, you have credit mix, you have your credit history, and you have your recent inquiries into your account. Okay, so let me give you a winner situation, a winner strategy. Make sure that you constantly check your FICO, and you want to sign up for services as free as Credit Karma, NerdWallet, Wallet Hub to continually monitor. And by continually, I'm talking about once a month or once every 2 weeks, continually monitor your credit score. Okay, you can also go to a website called annualcreditreport.com that once a year allows you by law to see your credit reports from Equifax, Experian, and TransUnion. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. I'm still having a conversation with you today, explaining in detail the reason why you have not been approved lately for the $25,000 PenFed Line of Credit. And I want to talk to you now about your DTI. What's that? DTI? Oh, you want me to define it? Well, basically, your DTI is your debt to income ratio. Okay. And basically, you take your debts and you just divide that by your income. So by debt, I'm talking about your debt payments, though, not the debt itself, but your debt payments. Okay. And if your DTI is more than 35%, you're going to have a hard time being approved for the $25,000 PenFed Line of Credit. Why? Well, because your debt level is too high. Because 35%, that means that because if you, I want you to picture, I don't know if you are good at math, but you know, DTI is a fraction, right? So you put your debt payments on top, that's the numerator, and the denominator is your income. So if you have a high DTI, there are only two things that are mathematically proven. So either the numerator, in other words, your debt payments are high, or the denominator is low. So to reverse that scenario, you need to make sure your debt payments are low and your income is high. Okay, so those are things you need to think about. So you want to lower the debt payments. How do you do that? Well, there are a lot of ways you can do that. There are a lot of strategies you can implement. I don't know your budget, so I have no idea how to help you in terms of lowering your debt payments, but there are ways to do that. Same thing for increasing your income. Okay, either you get another job, or you get promoted at work, or you get a raise, or you get a bonus, or you have a second or third side gig. Whatever it is, you beef up your investments, whatever. So money. The whole thing about DTI is that it is driven by money, both at the top and at the bottom. Okay, and whatever you have to do to maintain a DTI of 35% or less, go ahead and do it. Okay, and PenFed pays attention to that before approving your line of credit. I want to talk to you lastly today about your CUR. This is your credit utilization ratio. And the thing is, if you're not approved and you keep applying for this line of credit from PenFed, and they just keep denying you and over. The problem could be that you have a high credit utilization. Yeah, if you have a high credit utilization, this could prevent you from actually getting a lot of credit, additional credit, that is, from PenFed or any other player. And the main reason is that a line of credit is a revolving product, similar to a credit card. Okay, when we talk about line of credit, we don't actually talk about an installment loan. We don't talk about an installment product. We're talking about a revolving product. So the thing is, if you right now, you probably have other credit cards and whatnot, and if you're keeping high balances on those cards, do me a favor. You want to lower those balances. I don't care how you do it. I mean, I really, as long as you are lowering your balances in a legit way, this is kind of cool. Okay. And you want to think of lower expenses. Okay. Maybe you are just living beyond your means, or you are just, I don't know. The thing is, I have no idea what's going on in your life right now. But the thing I can tell you right now for a fact is you got to come up with a plan to lower your expenses and increasing your income. Okay. Now, when we think about those two, increasing income and reducing your expenses, budgeting can help, right? Because budgeting gives you the tools that you need to have a clean cut, financially speaking. So there are a lot of apps out there. You can actually, there are a lot of apps on your phone that are for free. Some you have to pay for them. But if you want to go back to the good old Excel spreadsheet, why not? Okay, think about transferring balances also. If you have high credit utilization and you want to lower your credit utilization, you can think about transferring balances. Okay, but the bottom line is you want to keep your CUR, your credit utilization ratio, at 30 to 35% or less. Okay, so credit card, credit card, credit card. Right now, I want to talk to you about the credit cards you have in your wallet. Is the outstanding balance too high on those cards rather? If the answer is yes, then you really don't stand a chance to be approved. You may not be approved, rather. You may not be approved for the $25,000 PenFed Line of Credit. Thank you so much for your attention. I really appreciate it. I was just talking to you today about the $25,000 PenFed Line of Credit, why you're not getting the limit you need, okay? If anything at all, because again, they can just reject your ass. So number one, you have low assets. Number two, your PenFed membership is recent. Number three, you have limited cash flows, okay? Number four, you haven't had a stable job history in the last 5 years. Number five, your FICO score is less than 600. Number six, your DTI is more than 35%. And number seven, you have high credit utilization ratio. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.